So hi everyone. I've got Lincoln Valentine here. I'm meeting him in a way for the first time, and we've just had an hour conversation talking about all sorts of things. Lincoln lives an hour and a half north of Australia. He's going to introduce himself in a second, and I just thought it was fun to record a kind of a mini podcast B channel thing because, for all sorts of reasons that maybe I'll explain later, but I hope you enjoy this short podcast. We're going to be talking about CarMax, maybe Carvana a little bit. We'll talk about a French company called Robertet and maybe a few other companies as well. So we'll tune in. But Lincoln, welcome to the B channel of Guy's show. How are you doing?
Thank you, Kai. I'm doing very well. I feel like I've been thrown in the deep end here a little bit, and yeah, no, I'm excited to join. No, thanks for having me. And I live in Australia, actually, not an hour and a half north of Australia. That would put me somewhere in the Arafura Sea, but
He
but
lives
no,
in
I'm
Sydney. That's the
yeah.
an hour and a half north of Sydney. That's right. And why don't you just give a bit of background on yourself and how you ended up talking to me right now?
Yeah. So yeah, I've been in markets for a number of years. I read Guy's book many years ago, and it actually had quite a profound impact on me. And Guy and I were just talking. I sent him a letter to say thank you for some of the advice that was in the book, and he actually even responded to that, which was fantastic. And so we've just gotten back in touch. But my background, I've lived in quite a few different places growing up, but also career-wise. So my investing tends to follow that. So I'm very much a global investor, despite being based, an hour and a half north of Sydney, which is the far end of the world. It doesn't get much further. We're sort of the second from last stop on that line. But a lot of my investing is in, some of it's in the US, some of it's in Europe. And in other parts of the world, one of my investments is in Nigeria. We were just talking about that, which is probably a little bit risque for a lot of people, but it's a market that I've looked at in my career, so it's something that I feel relatively comfortable with.
And so just for everybody's interest, I wrote a book. I receive letters from people. I try. I don't succeed always to respond to every single one, and it's amazing how a simple response sometimes it's just receive your letter. Thank you so much for writing to me. Can create a connection, and so this was a back and forth that happened. I don't know, it went back and forth 2 or 3 times, and we just had an hour conversation privately, and I decided, why don't we make it public, or at least parts of it public. Lincoln, can you talk about your relationship to National Australia Bank and your private investment fund?
Yeah, so my day job is I work with NAB Private Wealth. So NAB is Australia's second largest bank by market cap. It's probably, well, it is Australia's sort of premier business bank. So if you're a business person, you're more likely than not to have an account with NAB, and they do a great job of servicing their private wealth clients. So. But on the side, I run money for myself, just for myself and family and a few friends. It's not remunerated. It's just I guess you could call it a hobby. But it's done. I try to do it in a professional way as much as possible, in a proper setup. And that's where I sort of pursue my passion for value investing. I'd say value in air quotes, because it's not trying to buy super cheap stocks that are beaten up all the time. Although there's a time and a place. But really trying to find high quality companies wherever they may be. It might be, from Kansas to Kenya, I think I say on my website. High quality businesses that I'd be comfortable owning for a long time, and those opportunities can pop up, in all sorts of places.
And it got my interest because people come when I have interns, for example, they come to me with stock pitches, and if you go to valueinvestorsclub.com, there are people who work as analysts at very, very highly respected places that write these incredible write-ups, and I receive them sometimes in person or over the internet, and often what I want to say is, you know what, I just want to see your personal account, your personal portfolio, and I want to see what trades you've made there. And I'm not interested in your particular write-up, because there are ideas that write up well but don't actually reveal how you're investing, and I'm curious to see that. And and I've encouraged people both inside Aquamarine and elsewhere to sort of set up a personal account that friends and family can invest in, and maybe eventually it'll become a portfolio or a business that you can run separately. And haven't really found people who been willing to do that. And in a podcast with Jeremy Stickney, I talked about what I would do if I was starting with $1 million. And I said in that podcast or question, I said the first thing I would do is get a job. So then I'm talking to Lincoln, and he's actually he's in a kind of a setup that that I'm actually encouraging other people to do, which got me all excited. So and what's interesting is that Lincoln, from my hour of conversation with Lincoln, has an extremely good institutional equities background, knows companies from all over the world, has lived in Japan and in Singapore and in the United States. And, he was just telling me he used to come to Nigeria on a regular basis. But it's interesting. I'm interested to see how Lincoln will scale up. I believe, Lincoln, as I was telling you, that the people who will end up investing with you are individual investors from around the world. So what I want to do now, well, I'm going to give you the right of reply, and then I just want to go into those three companies that we talked about: Robertet, the Nigerian company, and Carmax. But first, you should have the opportunity to correct and respond to what I just said. So go ahead.
No, I think everything you've said is exactly right. I mean, it's a matter of circumstance more than anything else. I mean, this is what I had to work with, and I think you're exactly right. I've done some of those write-ups myself, but until you put money to work, and you also construct a portfolio, and you have to live with your decisions, I don't think you really know how you're going to be as an investor. And so setting this up was partly to prove that to myself, that I can invest and that I can do it in a way that makes sense. Pardon me if some little people pop up in the background. It's getting late at night.
So Lincoln's in Australia. I'm in Zurich. It's late at night for him. No problem if family members come up, and we're not going to spend a lot of time doing this. So, so three companies that we talked about, amongst others. I'm curious to hear a little bit about each one, if you want. And which one do you want to start with?
Well, why don't we start with Nigeria, since we talked about it? And I know it's probably not a topic that a lot of people might be very dismissive of, and it's not a market that I'd be comfortable venturing into if I hadn't been going there on a professional basis quite regularly. And there's not many businesses in Nigeria that I would want to own. But this is a bank that I'm very familiar with. It's extremely well run. It stays out of trouble, and there's a lot of trouble that Nigeria's been through, and it's been through a very tough macroeconomic environment and a policy environment for a very long time. But this company's now trading on sort of 2.5 times earnings. Obviously, the cost of capital for the bank is very, very high because interest rates are very, very high. But it's well capitalized. It has a very high return on equity, very high return on assets. A lot of the balance sheet is actually just sitting in government securities, because there's not a whole lot of lending that goes on, especially to the consumer market. Most of the lending is in dollars, and it's to oil and gas companies. So there is an oil risk when you're dealing with Nigeria. Obviously, they've been through various cycles, but what we've seen over the past. So when did the new administration come in? It was probably about 18 months ago. They let the currency go, which is what the country needed. They hadn't adjusted the currency after 2015 when oil prices fell, and so it was wildly overvalued. And there was a huge currency shortage, effectively, because they were trying to hold it at a level that just wouldn't clear. But the bank's balance sheet, the assets are mostly in dollars. So whether the currency is at one level or another, it basically washes through. So, but devaluing the currency was necessary to get Nigeria back on its feet. It's got huge population growth, but it's not creating enough jobs. So you need economic growth for that country to actually get where it needs to go. So it's probably the best managed bank in the country. It's very, very well run, extremely cheap. You're taking some macroeconomic risk, but I've been there for quite some time, and I'm happy to continue to hold it. Just given,
Yeah.
it's got mid 20s to 30% returns on equity. So even with a high cost of capital, it's still, it should be trading well north of book,
Yeah.
and it's trading less than that at the moment.
So because we're going to make this relatively short and snappy this time. I'm not going to ask you lots of questions. Should we move on to Robertet?
Yeah, sure. I actually I actually came to it in a roundabout kind of way. I was actually looking at another company. I was looking at Firmenich, which is actually a Swiss company, which was merging with DSM in the Netherlands. And obviously, Givaudan, I'm not sure if I'm pronouncing that correctly, is very well regarded. And it's a fabulous company, but it's also very expensive.
Yeah.
And it's done extremely well. Firmenich is kind of I guess it's a similar type of business in terms of reputation and size. Well, not quite the same size, but and they're very similar. I mean, they're in suburbs not a stone's throw from each other in Geneva. So these are two of the behemoths of the flavors and fragrance business. The merger with DSM I thought was quite interesting. It basically allowed them to scale up and offer a sort of a wide menu of all sorts of ingredients, flavors, and fragrances, texturants, everything that a large consumer company could need. And that's kind of the strategy that they're pursuing. Is it sort of, you've only got a limited number of companies you're going to deal with, suppliers that you're going to deal with. Why go to 5 or 6 when you can go to one that can give you everything you need? That's kind of the thing they're pursuing. So I looked at that for a while, actually, made a small investment, and then I decided, no, that's and then I realized they had an investment in Robertet. And that's how I discovered it, was that actually in this business is quite unique in the fact that they're very focused on natural ingredients. It's a family-run business. It was also cheaper, but it's also very well regarded. And it's been quite successful in capturing a lot of these up-and-coming brands. So the challenges to the large consumer companies, it's I guess the barriers to entry in that space are not as high as they used to be. And there's a lot of regional up-and-comers, developing new fragrances, new food products. And Robertet is able to service them and give them excellent service. So they're growing quite nicely. I like the fact that it's been held in the family for a very, very long time. It's managed for the long term. And also this focus on natural ingredients. So they often have sourcing all the way back to, sourcing vanilla from Madagascar, and they know exactly where it's from. It's traced all the way through the supply chain. Sandalwood, which is in New Caledonia, which is just a stone's throw from where we are. So they have a portfolio of natural ingredients that, and I think there's a big focus from a lot of consumers to have that kind of transparency across the supply chain, that focus. So it just ticked a lot of boxes. Family run, good returns on capital. It's not the fastest growing business in the world, but it's quite sustainable. And the valuation was actually at a substantial discount to the rest of the industry. So it's actually one of my larger positions.
So I was the conversation I was having with Lincoln was I was talking about how you build an investment portfolio when you're on some kind of periphery. So Australia, New Zealand. I was talking about somebody who lives or who grew up in Tasmania. Maybe Germany. Switzerland is more in the center of things, but it's not New York, London, for example. And so we started talking about the companies that are headquartered in Switzerland that are global companies. And Lincoln mentioned, we talked about Firmenich and we talked about Givaudan, and then Lincoln talked about Robertet. So it's headquartered in Grasse, which is in the south of France, and I go regularly to the south of France. And so if you decide to invest in the company, you can have fun kicking the tires in Grasse and maybe going to Mougins and Cannes and Nice and all of those things. But last company headquartered in a place actually whose name is close to my heart, and is CarMax based in Richmond, Virginia. Why don't you talk a little bit about CarMax, how you came across it, and yeah, just like a few highlights.
Yeah, so I came across the company actually as a customer. So we were leaving the US, we were selling our vehicle, and CarMax made an instant offer on the car. And rather than spending the time to trying to find quote bids from other people privately or through other sites, it was being able to get a check from CarMax very quickly. But going into the store and actually speaking to the people there and understanding the process and understanding that it's a fixed margin process where the sales guys are not incentivized to try and push you on price if you're buying a vehicle. They're not necessarily incentivized to sort of underprice if you're selling them a vehicle. And it took a lot of the, I guess, friction and a lot of the mistrust out of the used car selling process. That was what initially attracted me to the company, was that, it's an industry that's synonymous with mistrust and information asymmetries. And they were doing what I thought was, all the right things to try and remove those, which sounded like a good business model. If you create customer trust, you're going to get repeat customers. And then obviously having had a good experience, I went back and looked at the stock, looked at the valuation, realized that a couple of people that I think very highly of had invested in the stock, including Lou Simpson, who'd come out of Berkshire. Ran the numbers. They have a relatively small market share of a very highly fragmented market. They've got some, like we said, a terrific business model. It's relatively low margin, but it's got good returns on capital. It's got good growth. It was relatively conservatively managed. They obviously came through the financial crisis, which was a very trying period, but the business model did survive. Car lending survived. Asset-backed securities for cars survived. In fact, I think, even though the financial crisis was quite tough for mortgages, I think car ABS actually came through the crisis relatively well in the end.
It did in the end.
In the end.
Last question on investing and portfolio management. So you have this kind of global portfolio run not an hour and a half north of Australia, but an hour and a half north of Sydney. Just out of curiosity for me, how many companies in your portfolio? How often do you trade? Any other exotic countries that, I mean, we've got the US, France, Nigeria. I mean, this is your family's wealth. How do you run it? How do you think about it?
Yeah, so I don't necessarily have the bandwidth to do lots and lots of stocks. So I think at the moment I've got 17, but probably actually the top 10 are about 70% of what we own. So relatively concentrated. My best positions, my best winners have been things that I've held for quite a long time. I'm talking 5 years plus. For example, would be Allison Transmission, a US company that I bought back in 2018 and held it for a very long time. And actually, for a lot of that time, didn't appear to be making much money until in the last sort of 18 months when it did very well and actually made a very nice return out of that over that period, sort of 20% annualized plus. And actually, most of the things that have done well have been things that I've held for the long term. And that's 3, 4, 5 years. So yeah, look, I'm not trying to, I do fall into the trap of trying to do something all the time. You find interesting ideas and you're tempted to do something. But the things that have done really well are where you're willing to put in a substantial amount of capital and just sit on it for quite a long time. For another example would be Essilor Luxottica, which I bought back in, again, I think 2018, 2019, and then doubled down in early 2020. And that was sort of a 7%, 8% position that's contributed about a similar amount to my returns over that time.
Right. So if you're a member of ValueX, you will likely find Lincoln at ValueX Clusters 2026, if possible. If not another one. I don't know Lincoln's travel plans, but Lincoln, last, if somebody's watched this and they want to get in touch with you and find out more, read your letters, engage with you, what is the way to for them to get in touch with you?
Yeah, just go to the website. It's a strange name that I've given it. It's Phronimos, which is PHRONIMOS.com.au. That's the easiest way to reach me. Yeah, have a look on. You can have a look on the website. I mean, this is just family and friends. It's a hobby really, but we try to post things up there to show what we're doing and talk about our investments. Um, yeah, that's how you can reach me. And otherwise, yeah, if you're in Sydney or an hour and a half north, you can always make the journey.
He's not coming an hour and a half north of Australia to save you if you're drowning in the ocean. So, but Lincoln, that was a lot of fun. Thank you so much. And
Yeah, thanks for having me. I appreciate it.
yeah,
And it's hopefully I will see you at ValueX in 2026
if
if
not
it's
at the maybe at the Berkshire meeting and the various places where value investors gather.
yeah, terrific.
So goodbye, everyone.